Good evening, ladies and germs. Tex here with you, taking over from my PIC ads tonight, having the night off. Wherever you are watching in the world, I hope you are staying safe and well. Of course, if you're picking up what we're putting down here at Team UTG, make sure you hit that subscribe button and turn on notifications so that when we post these market updates, you are seeing them as we are seeing them and trading them. And of course, for all our free guides, giveaways, and goodies, head over to unitytradinggroup.com. You'll also get a link to come into our free Discord, totally free Discord, and trade with not only a great group of traders, but a great group of people, a really non-judgmental, friendly, supportive community, just the way we envisioned it when we created it. So we really look forward to seeing you there and helping you become the best trader you can be. All right, let's get into this. BTC, FLTC, not looking great for BTC at the moment, although as we've said many times, in the macro scheme of things, we've come from 10K, we've come from 4K early in 2020. We're doing okay. So, but let's have a look at the TA and what it's showing us. It's still showing us these lower highs, these lower lows. That one, not quite a lower low just yet, but we can see we are kind of in this descending triangle formation at the moment. Although one thing that is positive is, yes, we made these highs at 42K, but we are still within a range to a degree. But one thing that does, I guess, concern me a little bit is now how many times we have penetrated this demand zone. If you want to see a really good guide on supply and demand, unitytradinggroup.com/supply and demand. Ads does a really great video showing you exactly how we trade with supply and demand, an old school FX technique that we brought over to crypto and tried to popularize because it helps you to gauge strength of pivots, strength of buy zones potentially as well, and volume and liquidity in particular areas. So if we're looking at this move now, yes, BTC and F in particular do like these little sort of double bottom formations before moves to the upside. But with the sentiment around the market at the moment, all this GameStop stuff that's been going on, that's an incredible read. If you don't know much about that, head over to our Discord. We've got a whole bunch of articles, and I've been talking about it a lot the last few days. A real win for the retail traders of the world. But considering where we are now, I'm not liking the strength of this area holding. I'll be completely honest with you. Even though we do have some oversold conditions here on Steamroller, it's instances like this where I rely a little bit more on the TA and a little bit less on my indicators, as incredible as they are. So we know that we've still got some room to move to the downside, and I believe we do still have a gap at around that 23K level, which we've got outlined there. So looking at this descending triangle, if we did a bit of a measured sort of move here, 27 or so percent from here, from this sort of area, is around that towards that gap. So if we can't hold this descending triangle formation and make some form of higher high or break out of this downward trend line, BTC may be in a little bit of trouble there, but you would imagine the liquidity on all the way down to that would be getting bought up pretty quick. We're sitting right below our point of control, which measures our highest point of liquidity, but we can see on the left-hand or right-hand side here, rather, that our areas of volume do align pretty well with our Fibonacci, in particular with our demand zone, and then quite a lot of liquidity sitting around that 22K level. So you would imagine it's not going to be a cascade down to 23. I don't imagine that would be the case. We would certainly sort of see little moves to the downside, board up, sold, as it starts to tap into those areas of liquidity all the way down before we potentially fill that gap. We know crypto or BTC gaps have a statistical likelihood of being filled 95% of the time, but that does not mean that they always get filled. So as we've said a number of times, talking about a dollar cost averaging strategy where you would layer in buys or sells, for that matter, if you're going up, layer in buys on the way down. Rather than looking for specific dollar levels, you may choose to elect to place buys at particular levels. It's not financial advice, of course, but you can lower your average BTC buy-in price by looking at dollar cost averaging all the way down. And I think it would be irrational not to consider the prospect of us coming back down towards that sort of 23.5K level and filling that gap. From there, I would anticipate that we would probably see a pretty swift buy up. I imagine there's a lot of liquidity stacked at those particular levels. Anything below 23 down to sort of 19, 18K, in my opinion, is an absolute gift. We look at all the institutional buying going on throughout the course of crypto, in particular Bitcoin at the moment, the likes of Grayscale, BlackRock, Pantera Capital, all those guys who are now looking and certainly heavily investing in Bitcoin. They're not doing that with the intention of Bitcoin going down, although Grayscale are down quite a number of percentage points at the moment on their positions on BTC. They're pretty smart dudes. They're not looking for BTC to go back down to 10K. They're looking for BTC to go to 100. So think about this from a long-term perspective, investor mindset, trader mindset. What are you doing short-term? What are you doing long-term? How are you seeing BTC in the next week? How are you seeing BTC in the next month and the next 6 months and the next year? So that's my thought at the moment. It really is going to be a struggle for BTC to break this 50 fib and that 33, 34, 33.9, 34K mark, in my opinion. And certainly if we did, we need to have a bit of a sign of strength here. But certainly, in my opinion, from here all the way down to 23K is a bit of a gift on Bitcoin, in my opinion. All right, let's get into USD as well. We had some strength on ETH the other day, where we did make another all-time high on the 25th of Jan. So just a few days ago, everyone was quite euphoric about ETH from that point. We did make a higher high from that point, although just very slightly made a higher high. So, it's this point now, it's this demand zone that kind of needs to stay held, I guess, in my opinion, in that 50 demand zone, 50 fib level. Although looking at this, I guess a little bit more of a sort of a clearer trading range, I suppose you might want to call it, within here. So ETH may still range within this particular level for quite some time yet. Looking at ETH again, the institutional buying, the sentiment around ETH and DeFi and all the stuff going on at the moment, certainly still in bullish territory and positive sentiment territory for ETH, in my opinion. If we look at our VPVR being our volume profile, has really been bang on the whole time with this, and we've spoken about this and referenced it to it a number of updates. So looking at where we were here, there were some buys and sells stacked at that 23 fib level, which we've seen a rejection off now, hitting this demand zone, this little pocket of liquidity. However, should we come back down and test this demand zone again, I'm not liking the strength of that holding, as I mentioned, and looking at our point of control back down towards that sort of 1100 level. Now, one thing that I like to do when I'm placing buys around particular levels, I'm trying not to look for exact dollars. That's why we use demand and supply zones, but I always try and place my buys just a couple bucks higher than maybe where everybody is looking, particularly on a far more liquid coin. This is almost $1,300 coin. This is not a 30-cent coin. So you can afford to place dollars or buys a little bit higher than what you would anticipate, and not get too much of your dollars stripped from you when you do that. So again, should we come back down and revisit this $1,000 mark, we can see the sort of the doji reversals, or the pin bar-ish looking reversals that we've had at these demand zones. So certainly if we come back down to here, I would be cautious of seeing the reaction at this level, because the way in which we've delved into these demand zones, there would be some liquidity that's been tapped a number of times there now. So heading back down towards that 930 level again isn't out of the question, but we want to just see what happens at this particular demand level, which is a pivot in the market, not a strong demand level. Back down here towards I guess a high level of liquidity and some higher stacked buys than what we would expect to see in this pivot zone here with a smaller amount of liquidity. So again, just playing it as it comes for ETH. If we look at our Unicon indicator, which has been bang on, we do have a down signal at the moment when we rejected of this Murray's channel, and we can see that we're sitting right on this 50 fib in between our Murray's at the moment, with our fib level stacked down towards this point of control at 1100. So a lot of things there are lining up at that 1100 level. That's where I'm looking at more buys on ETH. Again, not financial advice. I'm interested to see what Gravy Train tells us at this point. It says to long at this stage, but I'm not excuse that. I'm not overly confident of that at this point. So again, this $1,000 level, this $1,050 level makes a little more sense to me at the moment. LTC. Ooh, how I love LTC, my favorite. I'm still very bullish on LTC in 2020. There is no two ways about that. Again, though, not looking ideal for LTC at the moment, which typically would follow in the footsteps of BTC, as it often does. So we've hit this level now, a little bit more significant level of demand, but again, we've hit it a couple of times now, and I'd say the strength of anything holding there at the moment is dwindling quite a bit right now. So if we turn off our volume profile and turn on something a little bit more reliable, like our Unicon indicator, and although I don't like it, drawing in some trend lines, depending on how you would like to see this. One thing, I've been looking at this, but again, I don't put a ton of weight on it, is this sort of formation. I would like to sort of see, ideally in an ideal world, I would like to see something like that. But I think being a little more realistic, this is probably what we're going to see, and head back down towards that 110 zone on LTC again, because we're not making any signs of higher highs here at the moment. We're making lower highs and lower lows at this stage. So it would look like you would imagine a rejection between this sort of level up towards the sort of 140 mark if we cannot break, or if we can break that 23 fib level, and then I guess a continuation of this sort of bearish moves that we're seeing at the moment, all these downward moves. I said in a previous update, and I've been lucky to swing this a number of times. I bought back in at 123.33, which was this level here, and I did sell it at 140 with the anticipation of buying it a little bit lower. I've not yet purchased any more LTC at this level, because I guess when we had visited this demand level, I was maybe expecting a little bit more of a movement back down towards this scene of, I guess, the scene of the crime, as our friend David Modell says. So I'm still anticipating that. I do have buys stacked. Again, not financial advice. I've got buys stacked at around the 114 level, all the way down towards the $90 level, because I am, as I said, anticipating this to be a good year for LTC. Just because we are declining from 180 or 42,000 or 1,400, look at where we were 3 months ago, 4 months ago, 5 months ago. You would never in your wildest dreams 5 months ago think that we had rocketed up to 42K on BTC, or rocketed up to $1,400 ETH, or $180 LTC. So think of this macro scale, play it as you see it. You don't have to be in a trade all the time. Don't revenge trade. Don't let your emotions get the better of you, and don't try and listen to all these people posting their wins and their percentage gains, or whatever it is, and thinking that you need to be that person. Learn from this market. Let the trade come to you. Sit in fiat or USD if you have to, and wait for that right time to place that buy, or the right time to place that sell. The market's not going anywhere. Let the trade come to you. Come and chat with us. We're always happy to have a conversation with you about any way that you might be struggling or anything. As I said, we have an amazing community over at UTG, and we really look forward to seeing you there. So, of course, if you like what we're doing here at UTG, please hit that subscribe button and show your support for us. We really do appreciate it. I'm Tex. Thank you so much for watching. Trade safe, be well, and I will see you guys soon. Take care.